Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and this episode is brought to you by MoneyMetals.com, the most trusted online bullion dealer and depository in the United States. Use Money Metals for purchasing, selling, or storing physical gold and silver. Hit the link in the description below to learn more and use coupon code JesseDay to get a $10 discount on your first purchase. It's the second episode in a row where we are discussing my favorite commodity, and that is uranium. We've got a great guest for you guys, and that is Justin Huhn, an expert in the uranium sector and the founder of the Uranium Insider newsletter, someone I always love talking to. Justin, great to have you back on the show.
It's great to be back, Jesse. Thank you for having me.
It's been a while since I've had you on, so let's start with a year in review of 2023. But more importantly, I'm wondering how the events that transpired in the uranium markets this year are going to shape your view of how things are going to move forward in 2024. Maybe some thoughts on if anything has changed about the thesis in your mind or your own investment strategy when it comes to uranium.
I feel like the basic thesis around a shortfall of supply and a necessary price response is just it's kind of on steroids at this point. The theme that I just think about almost on a daily basis, and I continue also on a daily basis to try to find where this theme will be reversed, let's say, is an extremely short supply situation. There's very little supply in the short to midterm for uranium. And that's being exacerbated by a number of factors that we can get into. But just going into 2024, we have a very tight supply situation. The price response that we're seeing is supply driven, not necessarily demand driven. Demand is stable. It is increasing marginally over time. The biggest increases in U3O8 demand are coming not from new reactor starts, not necessarily from restarts or even life extensions. Yes, there's some near-term demand from life extensions, but really a big driver of this U3O8 demand is the rising tails assays for enrichment contracts. So all other things being equal, the U3O8 demand is really getting juiced up by these high tails assays. But really, 2023 was sort of a thesis confirmed kind of year. We saw a really big move, about a 70% move year to date in uranium itself. And this, of course, followed 2022's moves in conversion and enrichment. This is something that we knew would happen. So I'm not really going to take a victory lap on that. It's fairly obvious when you understand the nuclear fuel cycle that large increases in demand and therefore price for the services later in the fuel cycle will have a follow-on effect for the first element of that fuel cycle, which is uranium. And that's exactly what has happened this year. We've seen historical sellers in the spot market turn to buyers. It's just an extremely tight supply situation, and nobody knows where that relief valve is going to come from, at what price it's going to come, and in what sort of volumes. So it's from now into the near future, we have a very short supply, and for uranium itself, stable and rising demand. It's just 2024. I'm honestly expecting a significant move in this market, and pretty pumped for it, to be honest.
I want to touch on something you brought up there regarding conversion and enrichment, because uranium is a very complex sector in that sense. Perhaps you could quickly break down for us how conversion and enrichment plays a role in the fuel cycle and how that can affect the final price of uranium.
Sure, yeah, and I think there's some important points to this understanding that I will try to get across. So, nuclear reactors run on primarily enriched uranium. There are heavy water reactors, like the entire fleet in Canada is heavy water reactors. They're known as CANDU reactors. About 10% of the global nuclear fleet is heavy water, and they run on natural uranium. But the rest, 90% of the global nuclear fleet runs on enriched uranium. So in order to get uranium that comes out of the ground, the mined uranium goes through a mild process and turns it into uranium oxide or U3O8. That's yellow cake. That's cake in a can. That material is then converted into a gas. That's uranium hexafluoride. That gas is then enriched in centrifuges to separate and increase the percentage of the overall mass of the fissile isotope. So it's spun for a long period of time, very quickly in these centrifuges. The two main isotopes, U-235, U-238, are ever so slightly different in mass, and that's how the separation occurs. So you go from 0.7% U-235, that's a fissile isotope, all the way up to 4 to 5%. Usually somewhere around 4.5% is kind of average for a nuclear reactor. So you take that enriched uranium, then you have to deconvert it back into a solid, and then you have to fabricate it into fuel pellets and fuel rods. And that whole process takes anywhere from 18 to 24 months, takes quite a long time. So the knock-on effect for uranium is that in the enrichment process, the leftover material, or the tails, still has some of that U-235 in it. And the amount of U-235 that's left over in tails, that's the tails assay. So you go from 0.7% uranium, and the end product, apologize for the background noise, the end product ends up as 4.5%, and the tails still have some U-235 in it. And the amount of U-235 that's left over in the tails is dictated by the amount of energy that's expended in that process. And so really what we have is the tails assay of an enrichment contract dictates the amount of uranium that needs to be fed into that contract. So if you only have, let's say, a 0.2 tails assay, which, 0.18 to 0.2 is sort of what the global enrichment tails assay has been operating at, operational tails, for the last decade, okay? And there's been some wavering up and down depending on the source of the enrichment, whether it's Western or Russian. Russians usually spin it down a little bit lower. But right in that ballpark, let's just say 0.18 to 0.2 tails for a 1 gigawatt reactor. That's about 450,000 pounds of uranium per year, roughly. Maybe a little bit less, maybe a little bit more, based on that tails assumption. Well, what's happened because of this bifurcated market in the last 18, almost 24 months here, where Western utilities, which are 70% of the global total, are seeking out Western enrichment and avoiding new contracts with Russia for enrichment. That means that the enrichment that is in short supply in the West has seen way more demand than they have over the past decade. And therefore, the new contracts that they are signing are higher tails assay contracts. And this is because they need to use less SWU. Because they're trying to produce more material with the same amount of capacity in the same amount of time, they have to use less energy to do it, which means the leftover material is going to have more of the good stuff. Higher tails assay. What that means is if you have an enrichment contract at 0.3 tails versus 0.2 tails, that's a 20% increase in the amount of uranium that you have to feed into that contract. So we're seeing rising tails assays across the enrichment space, and that means more uranium is feeding into these contracts. So when we see the price of enrichment and the demand for enrichment rise, it has a direct knock-on effect to demand for uranium. So with this House Bill 1042 that was just passed today, this is the Preventing Russian Uranium Imports Act that was actually passed today. There's some waivers involved that potentially would be available to utilities that have high reliance or near-term reliance on Russian uranium. There's some other details about this act that we can get into, but I want to reiterate my point here is that at the end of last week, we actually saw a nuclear advocacy group in the States recommend a yes vote on this bill. And what happened was we saw some immediate demand for spot enrichment. And what did that do? Immediately moved the price of uranium. So increased demand, increased price for enrichment, increases the demand and the price for uranium. There's a direct effect. The opposite, however, is not true. We can see the price of uranium rise and fall independently without affecting the conversion or enrichment markets. So we could very well see $100, $150, $200 uranium without it necessarily moving up the price of conversion and enrichment. And why is that important to understand? Because as a nuclear utility fuel buyer, you have to buy all of these services and or the products of these services. So if U308 goes up in a bubble and conversion and enrichment on balance stay relatively stable in price, yes, they've been going up because of this situation, but they're not going to double in price from here, probably, knock on wood. That uranium price rising is not necessarily a deal breaker for a nuclear utility. They can't not have the fuel that they need. They will pay whatever price is necessary. And we are going to approach a situation in the next 2 years, 3 years, where we're going to have, maybe even sooner, where we'll have nuclear utilities bidding in a bidding war over the same limited supply of uranium. That supply is extremely limited right now. And I don't know what is going to be the relief valve for this situation.
Well, I definitely want to get into this bill being presented that seems to be accelerating when it comes to the ban of Russian uranium imports to the US a little bit later. But first, I wanted to touch on some investment specific questions because I think a lot of the time the macro gets discussed and a lot of people tuning in are pretty familiar with it. You know, I was talking to Mike Alkin on the last episode, and he was saying he doesn't do many interviews because the story's kind of the same, except for some of these new catalysts which you were talking about there. So I wanted to ask, when it comes to one's portfolio in the uranium space, from your perspective, do you think it's better to have a concentrated portfolio, i.e., a smaller selection of quality names which you stick to, a small basket of eggs, watch them carefully? Um, or do you think there's value in being diversified across the sector, whether that's multiple different companies or whether that's, you know, throughout the production chain from exploration through to development and into production? I think this obviously hinges on how much time an individual investor has to do the proper due diligence. But assuming that someone has a bunch of time to do the work, um, what do you think is a good approach to the sector when it comes to either diversification or concentration?
I suppose for me personally, and I think what makes the most sense for most people is something kind of in the middle. An overly diversified portfolio will underperform just because you're spreading out the risk to so many different companies. And I think that the less work you do, the more diversified you should be, pretty much. But at the same time, if we're talking about investing in miners, which is essentially what we're talking about, unless you're investing directly only in exposing to the commodity itself through Yellow Cake or the Sprott Uranium Trust. What we're talking about is miners, and individual miners are inherently risky for any commodity. So you don't really want to buy just one or two of these things, in my personal opinion. So a portfolio of 8 to 10 positions that's well researched is going to outperform, assuming you pick the right vehicles and or you at least pick some of the right vehicles. A portfolio of 8 to 10 companies, if you pick 2 or 3 big winners out of those 10, you're going to substantially outperform the benchmarks that are, the ETFs that are widely diversified. So, I mean, to give you an example, our portfolio since August of 2019 is up almost 400%. URA, including dividends, is up about 230%. So almost 2x the benchmark based on a concentrated portfolio. Big, famous investors like Druckenmiller and even Berkshire Hathaway, they go and they're managing a hell of a lot more money than I am, but they go in heavy. And when you see an opportunity, you go for the jugular, right? That's Soros's famous quote to Druckenmiller, and so these guys have made killings in their career by being very, very concentrated in their trades. Now, I'm no Druckenmiller, and most people are not Druckenmiller. In fact, nobody is Druckenmiller. But with all of that said, the more research you do, the more confidence you can have in your concentrated portfolio. And if you don't do a lot of research, you might as well just buy the ETFs.
And do you keep a certain percentage of your portfolio as kind of a gambling positions? Like you see an opportunity that looks like, okay, this could have a huge amount of upside, and the downside is it could also go to zero or close to that. Do you ever look at maybe an explorer? Do you ever look at those sorts of companies and think, okay, I'll position size accordingly. I'll take a very small amount of capital, throw it at that, and maybe have a small bucket that is more for a higher level of speculation in the portfolio?
For me personally, and this is for any commodity really, this could be the gold and silver space or the copper space or the uranium space. If I am familiar with a team, 1 or 2 individuals that have performed extremely well for me in the past, and they're starting some new venture, and it's a tiny cap stock, and I believe that they are going to turn it into something, I will personally speculate on that vehicle just based on the small market cap and the team. And I've had major winners across multiple sectors simply by betting on people, betting on the jockey, not the horse, right? So, and that's something, no matter what the size of the company or what the commodity or whatever it is, that whatever sector it's in, you always want to look at management. You always want to look and see what they've done in the past. That's very, very important. For the uranium space, generally speaking, for our newsletter and in our positioning and our focus list portfolio, we tend to not gamble on explorers. So rather than going after a drill play, now an explorer that already has proven out, has already hit, let's say, and you can remove some of that risk, that's something that we might consider. But the small cap explorers are really in a tough position. Especially if they're not in ETFs, so they don't see the capital flows, that flywheel. It can be very dilutive to hang on to a small cap explorer that's not in the ETFs. Like if you've been holding on to one of these $10 or $20 million cap companies for the last 5 years, guaranteed their share count has probably doubled or tripled over that period of time. So that's always a risk. We really like real companies we believe will either be taken out by a major, or they're going to actually produce some kind of cash flow during this bull market. So that's really what we're looking at. But as far as small cap speculation, it's not really something that we gamble on as far as making a responsible capital protective portfolio. But me personally, I have multiple accounts, and one of those accounts, and this is not uranium specific, this is just me and my kind of trading psychology, is my primary account is fundamental investment based, and I look at it a couple of times a month. I have another account where I do a lot of trading, I do a lot of options, and that's what keeps my active mind and busy, right? So that's where I like to mess around with trades. And ironically, the portfolio that I don't ever touch, that generally outperforms my hyper trading portfolio. So, but I do that so that I don't have to do it with my main portfolio. So I can mess around with a smaller amount of money and keep my brain active. And sometimes I'll knock it out of the park with an options trade, and that's always fun. But for the most part, I have a stable fundamental account where I don't do a lot of trading in and out, generally speaking, especially with something like uranium that I understand very, very thoroughly, is I will buy on dips and hold for the long term. And I'm in the United States. I know that you're not. Lucky you. I'm in California on top of that. So I don't like paying the tax man more than I have to. So if I trade in and out, I have to reset the capital gains clock. And that's just not something I'm keen on doing. So I tend to be a buy and hold and add on dips type of investor if I feel that there's a year or 2 or 3 out in front of me on this investment, and I feel very solid in the fundamental thesis for that investment.
Yeah, I find that a lot of people online, when you get on social media, uranium, Twitter, etc., are often talking about trading in and out of positions. X company didn't do as good as I thought it would this month, so I've rotated that into this company and this company now. And it's kind of, I don't know, I question that approach for the majority of investors. I mean, it takes a special sort of skill and psychology, especially, to be able to do that with any degree of success, especially, as you mentioned, when there's tax implications, etc. So do you think for your average retail investor out there, when it comes to the uranium space, I think psychology comes into play because it's so volatile and because there's such a hype built around the sector when it comes to social media? It feels like people almost feel like they have to do something. What's the latest update? I need to do something. Maybe speak a little bit about that, about is it better to just have a buy and hold and buy on dip strategy? And maybe if you could give some insight into your own psychology when it comes to approaching the space and how people might be able to wrap their heads around it from that perspective.
Sure. I find that individual trading psychology can be quite different between individuals. And so I think it's really important for individuals to recognize their own psychological patterns when it comes to markets. So I feel like I know myself pretty well on that front. I know what my main mistakes are. I know what my main psychology is based on the market fluctuations. I'm perceived by our membership and people on Twitter as being this very stoic investor, and I'm not necessarily. I mean, I'm glad that I come off like that, but a day when my entire portfolio is down 5%, I feel it. On a day when my entire portfolio is up 5%, I absolutely feel way better in every other thing that I'm doing throughout that day. Maybe, I'm going to go for a bike ride or go for a hike, and the mood is happier with me and my wife and kid, and all these. I'm very much affected by the fluctuations of the market, but I also know that for me, selling out of fear and resetting that capital gains clock and knowing deep down that I want to be in that position for the longer term is something that hurts a lot psychologically for me. So if I dump a position and then I know I want back into that position, that is extremely stressful for me. So I would rather personally ride the volatility up and down rather than trying to trade in and out and reposition. Also, that happens to be better for me from a tax perspective, generally speaking. So it's really important to recognize your own trading psychology, I think. And when you have a big win or a big loss, it's important to kind of sit for a second and think about what you did right or what you did wrong and learn from those mistakes. And I honestly think that new investors who have big wins right out of the gate, that's kind of the worst thing that can happen to you, because you get this inflated sense of competence that you might have just gotten lucky, but you think you're going to swing for the fences. And I know somebody personally who a younger guy who bet really big on a couple of options trades and turned 10K into 200K and over the course of a couple of months. And he got so overconfident that he ended up just taking that same amount of leverage and just like trying to run with it, and he brought that account back down to zero in the same amount of time. And this will happen over and over and over. So it's important to recognize what you did right when you have a good win and what you did wrong when you have a big loss. And you'll learn over time how to limit those losses, how to protect capital, how to invest wisely, how to use leverage wisely or not, depending on your psychology. So I think the most important thing is just to have sincere and honest introspection and try to really understand what are your strengths, what are your weaknesses. So I know my strengths. My strengths are relative calmness during volatility. My strengths are recognizing my own confidence in something that I am fundamentally well researched in and having that influence the way that I trade or not in my portfolio. And what works for me and has worked for me, especially for this particular investment over the last number of years, is just to hang on for dear life and add on dips if I can. And that's another thing that I think you mentioned, Jesse, just in your question, I think is a really, really important point. The volatility here in this sector really does, I think, inspire people to try and trade in and out more, because especially if you're I want to say younger investor, but let's say less experienced investor and possibly with a smaller amount of capital, you tend to want to swing for the fences. And that's just not a smart thing to do. And so what you're trying to do is trying to maximize your returns in as short a time as possible, knowing that this market's going to last another 12 or 24 or 36 months, or maybe even longer. And you're trying to squeeze every possible ounce of upside potential out of the minimal capital you have invested. And what that usually leads to is being fully allocated with every penny to your name. And you don't want to do that. No matter how bullish you are on something, you always want to keep some cash on the side, because when the washout comes, and it will come, okay, I'm as confident as anybody in this market for the next few years, like extremely confident based on all of the research that we've done. We are going to see multiple 30 to 50% pullbacks during this run that I think is going to return multiples on our investment. It's going to happen. You're going to want to have some cash when that happens. So rather than trying to time the highs and lows perfectly and trade in and out, and by the way, most people on Twitter who are saying that they traded in and out and they bought the perfect lows and they sold the perfect highs, like barely anybody does that. And if you're an extremely skilled trader and you're trading out of a retirement portfolio in the States, or you're in a jurisdiction internationally that doesn't have these tax implications, knock yourself out. In fact, knock yourself out anyways. I don't really care what you do. But this is what I do. I buy and hold. I add on dips on investments that I'm fundamentally very, very confident in.
You mentioned having some cash to take advantage of pullbacks. That's kind of a tricky situation for a lot of people, because the question is, how much cash should I have? And there's that narrative floating out there right now continually, especially when it comes to finance on YouTube, that there is a recession coming, and some people are saying it's going to be the mother of all recessions. It's going to be a new Great Depression, and we're going to see a massive correction in the market. Everything's going to sell off. Um, what do you think the likelihood of such an event occurring? A lot of people are pointing to 2024. Mind you, a lot of people were saying 2023, but it does seem there's so many data points when it comes to the economy that it's very alarming. And it seems that, the Magnificent Seven, this small handful of tech stocks cannot continue to hold up the broad market for an extended period of time. Do you think, first of all, what are your thoughts on the potential of a recession coming? And do you think it's worth keeping maybe some extra cash on the sidelines in times like these for this sort of broad market sell off that could occur in that scenario?
Well, I'm definitely not a macro guy, so I can't give you the over under on the likelihood of Black Monday Part Two. I really don't know if that's going to happen. I know that a lot of very smart macro people have been expecting that to happen for at least 12 months from now, and so it's. I tend to always think about this Peter Lynch quote, which I'm gonna butcher, but basically saying that more money has been lost preparing for corrections and avoiding corrections than actually in corrections. And if you're looking at the uranium stocks and the uranium space, and you were out of this market entirely or mostly because you're worried about the S&P crashing, you missed a hell of a year. It's been a fantastic year in this space, and concerns about a broader recession or quote unquote crash, liquidity event of some kind, kept you out of the market, and that's truly unfortunate. So for me, knowing what I know about uranium, I can't not be long uranium. With all of that said, we've got some cash, and if you are bared up, short the market. But everybody's got to figure this out for themselves. Do I think it's wise to hold some cash here? Absolutely. I do think that based on my contacts who are far more macro informed than I myself am, I think the likelihood of a quote unquote continuation of a bear market in the broad market is high. I think the likelihood of a deepening recession is high. And I think it probably will affect economies and markets. But I also know that uranium is going higher, and it could go potentially far, far higher than anybody is expecting. And those two things are obviously juxtaposing and difficult to reconcile. So for me personally, and generally speaking, for our membership and our positioning here, I think that keeping some cash on hand is probably a good idea. If you are more confident in the bear thesis for the market, short the market. Buy some crash puts that are 18 months out, and just like don't think about it every day. If you want, there's a bull market somewhere, and always. And right now, that's in uranium. So I want to ride that trend. The trend is extremely clear. Whether you're looking at the commodity or looking at the stocks, we're in a bull market. So I'm going to continue to ride that with the majority of my investable capital. I'm also generally pretty bullish on precious metals. It's been an incredible pain trade, but I continue to self-immolate on that front and believe that it will have its day in the sun, and I think it will. I'm holding some cash to buy an oil dip if we do get a recession. If oil dips another 10 or 20 bucks, I'm going to go after that pretty aggressively. But other than that, holding some cash for market opportunities, I think, is always, always smart. And the big boys that manage a hell of a lot of money, they always have some cash. They're never 100% invested. And even if they have very large positions in a very concentrated portfolio, they will never not have some cash, because the markets always give you opportunities, even if it's in different sectors. But even within the sectors that you watch, are we going to have opportunities to buy the dip in uranium? Yeah, absolutely we will. So yeah, that's about all I have to say about that. I really don't know if we're going to have a major liquidity event in the broad markets. I have no idea how to give an over under on that. But I think that holding some cash and potentially being short the market is probably not a bad idea, without really having a solid near term time frame or something like that.
A ton of great points mentioned there. I do want to now move into some of the recent news in the sector. You did touch already on the potential for a ban on Russian uranium imports. Could you expand on that for us? It seems like it's accelerating and getting closer to being finalized. Um, do you see this being a real catalyst, or is this just political theater in your view?
Um, I don't really think we need another catalyst, and I don't necessarily think this is the quote unquote the catalyst, but it's something. It's another piece of a complex puzzle for nuclear utilities to navigate in this era of concerns about security of supply. So this bill that just passed the House, it still needs to pass the Senate. The Senate is some of the Senate majority leaders are basically saying that they're not going to vote to pass it unless there's a measure that's approved within, I think it's the Defense Authorization Act. I believe I have that correct, that will allow for a significant amount of funding that will basically support the nuclear fuel cycle in the United States. And that would include potential financial hardships incurred by US utilities that would have to source near-term enriched uranium ex Russia, which is going to be expensive and potentially impossible depending on the time frame and the quantities and the enrichment levels. So I can tell you that the market is responding to it. The physical market's responding to it. So, on Friday, we had a major nuclear advocacy organization in the United States recommend a yes vote on this. And the market moved in response to that recommendation, sent out an email, and within an hour, we saw bids rise within the uranium market, within the enrichment market, and even the conversion market as well. Across the fuel cycle, we saw bids start to rise just on that recommendation from this advocacy organization. Then today, when it passed, it rose again. So we've seen $1.50, $1.75 jump in spot uranium just around this bill. Of course, it's a very tight market to begin with, so you can't really give all the credit to this bill passing, but it's just one more thing. And this bill includes waivers out to December 31, 2027 that will allow a U.S. utility who actively goes out in the market seeking a replacement for a Russian uranium delivery if they cannot find it, or potentially if it threatens the security of their supply and the operation of their plant, they can request a waiver, which may or may not be granted. It probably would be at this point by the Department of Energy. So it's just another. I don't really think it's kind of a smoke signal. It's real. There's also the potential that we could see a retaliatory move by Russia to actually ban the exports. I think that's less likely to happen, primarily because Russia has been an incredibly reliable supplier of enriched uranium globally. And I don't think they're going to want to be seen as an entity that would pull back and renege on contracts. So it's, in my opinion, that's unlikely to happen, but there's a more than 0% chance that is the case. If we ban that material, that they might say, all right, well, you're going to ban us. You can't fire me. I quit. And then you're just not going to send it. So that is possible, but I'm not betting on any of these things. These are all just sort of bonuses. It's really all about the supply shortfall going out for the next 3 to 5 years. And there's really nothing that's going to fill that. That's the core. But then you have these other, potential catalysts and pieces of news that come up, and this certainly can potentially affect the market. And we're seeing the market respond to it. So it's not nothing.
I also wanted to get your thoughts on this pledge by multiple countries at COP28. That's the big, I don't know if you want to call it a climate change conference or a conference for an environmental conference, but basically several nations have pledged to triple their nuclear power output by 2050. This is spreading all over Twitter. I probably retweeted it as well. I got caught up in the moment, but I'm not really that bullish on it. It seems like one of these grandiose political grandstanding sort of, we're going to go net zero by this year. But by that time, everybody making this pledge is either going to be out of power or dead, probably both. And the other problem I have is these politicians who make these pledges, to me, are some of the most ignorant and, just, we could even say downright evil in some cases people. I think a lot of whether you believe climate change is real or not, a lot of the policies being pushed by this political elite make no sense at all unless you imagine their goal is to crush the populations into poverty. So I'm not really that on board with this particular group of people pledging to do something that's supposedly going to be bullish for the nuclear sector. Um, but maybe I have an extreme view on that. What are your thoughts?
It's a tricky thing to answer. First of all, I generally echo your sentiment. Uh, for me, I'm an advocate for nuclear for reasons that have nothing to do with climate. And I don't really care what the reasons are. If they're going to be backing nuclear, I'm in support of it. Um, I tend to agree that these are large proclamations with no real commitments built into them yet by these 23 or 24 countries that have supposedly signed this pledge to triple nuclear capacity by 2050 as part of a net zero goal. Um, Either way, what I do think it does is it legitimizes nuclear in the eyes of the environmental left. And so a lot of the environmental left still is on the fence or anti nuclear. And that is changing, and it's changing quickly. We're now seeing two major parties in Germany running on a platform of restarting up to 6 reactors in Germany. And, eventually, big up to Doomberg. He has always stated, he believes that physics will win. That for countries that are moving against physical reality in terms of vastly expanding renewables and ignoring the obvious solution, which is nuclear, things will get bad in those countries, and the politics will shift, and they'll revert to what makes physical sense. And we're actually seeing that playing out in countries potentially, like Germany. So I think seeing this in the headlines at the COP conference does legitimize nuclear, and it sort of gives a pass to the people who have been fence sitters about nuclear, and or have been adamantly against nuclear because it's too slow or too expensive or whatever it might be. And of course, this conference was held in Dubai, which, the UAE has been an incredible nuclear success story. They're getting ready to grid connect their 4th reactor at the Baraka plant. This nuclear power plant with 4 reactors is going to be 25% of their grid that they built in less than 10 years, on time, on budget, with collaboration with South Korea. It's a brilliant, super inspiring story. And they did it, they're going to play along with the narrative of the day, but if you actually dig into their story, they're looking for clean, reliable, cheap baseload power. They could give a damn about carbon emissions. And to see that is really inspiring to me. So I'm happy to see it. Whether or not I necessarily agree with the motivation is sort of irrelevant at this point, because I want to see nuclear expanded for other reasons, and this hopefully will give some kind of social permission to the people that have been anti-nuclear, but also up in arms about climate. Because it doesn't make any sense. It doesn't make any sense at all to have both of those things. So yeah.
Well, Justin, thank you so much for joining us today. It's been a very enlightening conversation. For those who want to hear more and learn about uraniuminsider.com, what is the service you provide? I'll obviously put a link in the description below so people can check it out, but tell us about Uranium Insider.
Sure. Yeah. Thanks, Jesse. We provide a monthly newsletter. First of all, that's 40 plus pages, goes in depth into the fundamentals of the sector primarily, and also, of course, we have a recommended focus list portfolio of, I think right now we have a 9 position focus list portfolio, in addition to some cash. So we track the moving of these companies. We do our own due diligence and our own deep research on the potential investment opportunities in the space with due recommendations. I personally do a daily update that's either in the form of an email with data or a video. Most of the time it's a video, an update video that I put out to members. We do monthly members only webinars. We're actually having 2 this month. A couple of days, we're bringing on a couple of expert technicians who are going to share their charts with us on uranium. And then we're going to bring a nuclear energy industry executive who has 40 plus years in the space on the following week for our members webinar. So these are great events where we have a big portion of our membership join in and ask questions in real time, and we get to dive really deeply into the sector. We focus, all we do is uranium. So we're highly focused on this sector, and we spend an enormous amount of time communicating with our contacts in the industry and making sure that we understand deeply what exactly is going on in the physical market, first and foremost. because we know that our membership, they do to a large extent follow our recommended portfolio, but they also invest however they wish, and more power to them. But to understand what is going on in the physical market is paramount. So that is something that we've put a lot of time and energy into, so that we know exactly who's doing the buying, exactly who's doing the selling, in what volumes, and what we can expect for the market going forward. And that's, in my opinion, because of the volatility in the sector, I think it's hugely, hugely important to keep on top of the movements of the physical market. So that's really what we focus on more than anything.
Great. Well, thank you once again, Justin, for coming on. I learned a ton during this conversation. I'm sure everybody watching did as well, and looking forward to doing it again in 2024.
Happy to do it, Jesse. Thanks for having me on.
And thank you for joining us today. As a reminder, this episode is sponsored by moneymetals.com. Use coupon code JesseDay to get a $10 discount on your first purchase. Link is in the description below, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.